Hello, everyone, and welcome back to the channel. Today, we are diving deep into the recurring events that consistently influence the Indian share market. Understanding these unique patterns is not just about curiosity, it's about gaining a clearer perspective to navigate and potentially profit from the ever dynamic world of Indian equities. So, let's get started and demystify these powerful market drivers. Before moving on, please read the entire disclaimer carefully. So, the first event is the Union Budget. The Union Budget is a highly anticipated annual event that significantly influences the Indian stock market as it outlines the government's economic policies, spending plans, and taxation changes. The market scrutinizes the budget for measures that promote economic growth, increase disposable income, or provide incentives for specific industries. Positive announcements like tax cuts or increased capital expenditure often lead to a bullish market sentiment, while any disappointments or unfavorable policy change can trigger market corrections. It directly impacts corporate earnings, investor returns, for example, through capital gains tax, and overall market liquidity. Let's move on to the next event, which is the monsoon. The monsoon is a critical factor for the Indian economy, especially agriculture, which contributes significantly to the GDP and global income. A good monsoon leads to higher agricultural output, boosting rural demand for goods, services, and consumer products, positively impacting sectors like FMCG, auto, especially two wheelers and tractors, and rural finance. Conversely, a weak or deficient monsoon can lead to reduced crop yields, higher food inflation, and a slump in rural consumption, negatively affecting these sectors and overall market sentiment. Let's move on to the next one, which is the RBI monetary policy announcements. Now, the RBI monetary policy announcement, particularly changes in interest rates like the repo rate, profoundly impact the Indian stock market. A rate cut generally makes borrowing cheaper, stimulating economic activity, boosting corporate earnings, and infusing liquidity into the market, which is usually positive for equities. Conversely, a rate hike makes borrowing more expensive, potentially slowing down economic growth and negatively affecting rate sensitive sectors such as banking, real estate, and automobiles. RBI policies directly influence investor sentiment, cost of capital for business, and foreign investment flows. Moving on to the fourth one, which is the quarterly earnings season. The quarterly earnings season is a period when publicly listed companies announce their financial results for the previous quarter. These announcements are crucial drivers of stock prices and overall market sentiment in India. Investors closely analyze these results to gauge a company's performance, profitability, and especially future outlook, which in turn influences their investment decisions. Strong earnings growth often lead to a positive re-rating of stocks, while weaker than expected results can cause significant declines. The collective performance of companies during this season provides insights into the health of various sectors and the broader economy as a whole. Moving on to the fifth one, which is the global cues and events. The Indian stock market is increasingly interconnected with global markets and is significantly influenced by international cues and events. Major geopolitical developments, global economic data like US inflation or GDP, commodity price fluctuations, especially crude oil, and central bank actions in developed economies like the US Federal Reserve all play a crucial role. Foreign institutional investors fund flows, which are often dictated by global sentiment and interest rate differentials, can cause substantial market movements in India. Therefore, investors closely monitor international developments to gauge their potential impact on domestic equities. Moving on to the next one, the sixth one, which is the Muhurat trading. Now, the Muhurat trading is a special auspicious trading session held for an hour on Diwali, marking the beginning of the Hindu New Year. Investors make symbolic purchases during this time, believing it brings good fortune and prosperity for the year ahead. It is considered a highly symbolic event, with many participants aiming for long term investment rather than short term gains. This session often sees increased volumes and positive sentiment, acting as a cultural and financial milestones for the Indian stock market. Moving on to the next one, the seventh one, which is the April effect. The April effect is a less commonly discussed event in the Indian market compared to its Western counterparts, January effect, where it often refers to a tendency for stock prices to rise in April. This could be due to the factors like the start of a new financial year, fresh institutional allocations, and tax related buying. While not as pronounced or consistently documented as the other seasonal effects in India, market participants sometimes observe a positive sentiment or uptick in certain sectors during this month. However, current market movements are also heavily influenced by immediate corporate earnings and global cues. Moving on to the next event, which is the number 8, festival season demand. The festival season in India typically starts from August till December, including festivals like Raksha Bandhan, Ganesh Chaturthi, Durga Puja, Diwali, Eid, Christmas, often witnesses a significant surge in consumer demand. This increased consumption, particularly in sectors like consumer durables, retail, automobiles, jewelry, and financial services due to festive loans and spendings, can positively impact the earnings and stock prices of companies in these segments. The overall positive sentiment and increased economic activity during this period often contribute to a bullish undertone in the market. However, commodity prices can also firm up due to higher demand during this time. Moving on to the ninth one, which is the Santa Rally. Now, the Santa Rally refers to a phenomenon where stock prices tend to rise in the last 5 trading days of December and the first 2 trading days of January. This phenomenon is more significant in the Western markets than the Indian, but still it is a mentionable event in the Indian share market as well. This rally is often contributed to year-end bonuses, holiday spending, and optimistic investor sentiment heading into the new year. Small cap companies have historically shown a stronger Santa rally effect in the Indian market compared to the large cap companies. And let's move on to the next one and the last one, number 10, which is the election. Now, elections or the general elections are one of the most significant events that introduce both uncertainty and potential for major policy changes, heavily influencing the Indian stock market. Generally, it takes place every 5 years. The market often reacts to pre election polls, manifestos, exit polls on the day of results, and the actual election results, with political stability and pro growth policies generally leading to positive sentiment. Different sectors may react differently depending upon the winning party's agenda. For instance, a focus on infrastructure could benefit related stocks, or say focus on agriculture uh, have a positive impact on the stocks related to the agriculture sector. Promises of increasing the uh, defense budget or the railway budget have a corresponding positive effects on the respective sectors. High volatility is quite common during election periods as investors adjust their portfolios based on anticipated economic and regulatory shifts. So we have taken a closer look at the most significant recurring events that shape the Indian share market. By understanding these recurring events and their underlying drivers, you are not just observing the market, you are gaining valuable insights that can help you make more informed decisions. What is your favorite market event? And which one do you find most impactful? Let me know in the comments below. If you found this video helpful, please give it a thumbs up, subscribe for more insights into the Indian share market, and do not forget to hit that bell icon so you do not miss our next deep dive. Thank you for watching this video. And as always, have a safe and happy investing. Goodbye.